Hello everybody, and thank you for watching the Wealth Guard Show. I'm your host, Tom White. Well, it was another tough week for stocks out there as the Dow Jones Industrial Average fell below 12,000. Doesn't look good out there, as this week's looking a lot worse too. I want to tell you a story about a guy named John. John used to work with us when we were in the first year in the business about 12 years ago, and he was an older guy, retired from the car business and got into selling some stocks. And it was right around the time of the dot-com bust. And John really couldn't stand the fact that I had a system that said the stocks were going to go down and that oil was looking real strong and good. And I was putting money into oil stocks, and John just couldn't figure the market out and hated to look at a younger guy like myself, and I was in my 20s at the time. And he couldn't bear the fact that I would know something that someone his age wouldn't know. And it was funny because one day I heard on the phone as I was walking up behind his cubicle, and I could hear him telling a client, "Well, you might as well keep your money. Ain't nothing I can do with it now." And I feel bad for John. We always laughed about that. We thought that was the funniest thing. Hey, because we made money by selling things. If you don't sell things, you don't get paid. And, of course, consequently, John was out of the business. But John was an honest guy. John told people the truth. He couldn't do anything with their money at that time. John didn't understand certain principles that I'm teaching and that you're about to learn. And really what we're doing is we're just trying to find where the evidence is leading us. We're just weighing the number of positives versus the number of negatives and coming to conclusions, as you'll see. We're going to look at the charts here in just a bit. Let's start this off with our principles. And if you're a regular viewer of the show, then you already know this, but point 1, the US dollar and the commodities move in the opposite direction. Point 2, commodities and interest rates, they move in the same direction. And last, point 3, high interest rates are bearish for stocks. And so we begin with the US dollar. And a look at the daily chart of the US dollar, we see some improvement here down below. Point 1, the stochastics got a bullish signal and they're lifting up higher pretty sharply too, so we gave it a green mark. And above that, point 2 shows the MACDs are getting ready to confirm the stochastics, and we're waiting on that. Waiting for that black line to cross over the red. And the histogram bars are rising near that 0 mark too into bullish territory. So we gave this one a yellow mark. Up top, point 3. The relative strength index is also rising sharply too, so we gave this one a green mark. And over on the weekly chart, down below point 1, the stochastics took a break 2 weeks ago. They were falling, but now they're moving up higher. Gave it a yellow mark, a little caution here. But point 2 up above that shows the MACDs are positive, as the black line is across the red already, and the histogram bars have moved up too, so we gave this one a green mark. And up top, point 3, relative strength index is also reaching higher. We gave that one a green mark. And so, summing up the US dollar, we analyzed the daily chart and the weekly charts. Over on the daily chart, we found the stochastics were positive. We gave them a green mark. MACDs were still neutral. They haven't confirmed the stochastics yet, so we gave it a yellow mark. And the relative strength index, that was positive and lifting higher too, so we gave it a green mark. Over on the weekly chart, stochastics were neutral, so we gave that a yellow mark, but the MACDs and the relative strength index were both positive. We gave those green marks. And for a total for the US dollar, got 0 red marks, 2 yellow marks, 4 green marks. And now we'll take a look at the commodities represented by the CRB Index. And on the daily chart of the commodities, down below, point 1, the stochastics, they're in overbought territory, but they're still lifting higher. We gave it a green mark. And above that, point 2 shows we got a little bit of a rest here with the MACD histogram bars. And MACDs themselves, black line, looks like it's still positive though, so we gave it a yellow mark. And point 3, relative strength index looks like it might be getting ready to take a break here. The trend is still higher though, so we gave it a yellow mark. And a look now at the weekly charts, down below, point 1, the stochastics. Got a bullish signal here in oversold territory as the black line crossed over the red and they're moving sharply higher. We gave it a green mark. And above that, point 2 shows the MACDs have yet to confirm that action, but the histogram bars have flattened out, so we gave this one a yellow mark. And above that, point 3, relative strength index is bouncing. Looks like it may be reaching higher. Gave it a yellow mark. And summing up the commodities, we analyzed daily charts and the weekly charts. On the daily chart, stochastics were positive, gave them a green mark. MACDs and relative strength index were neutral, gave those yellow marks. And on a weekly chart, found the same thing. Stochastics were positive, MACDs and relative strength index were all neutral. Gave this one a total of 0 red marks, 4 yellow marks, and 2 green marks. And now we'll follow it up with the 10-year Treasury yield. And a look at the daily chart of the 10-year Treasury yield down below, 0.1 the stochastics. We got a bullish signal a little while back as the black line crossed over the red, but we've been flat now since, and we give this one a yellow mark. 0.2, the MACDs, they're flat too, and the histogram bars, not a lot going on there, so we gave this one a yellow mark. And up top, relative strength index, 0.3, had a bounce a while ago, but we've been flat there too, no clear direction, so we gave this one a yellow mark. And a look now at the weekly chart, down below, stochastics. We're in oversold territory. Looks like we're trying to make a move on a bullish signal. We haven't gotten that yet, so we gave it a yellow mark. And above that, 0.2 shows the MACDs are still in decline. The histogram bars, they are too, so we gave this one a red mark. And relative strength index on 0.3, we're still sloping downward, gave this one a red mark too. And so summing up 10-year Treasury yield, we analyzed daily charts and the weekly chart. And on the daily chart, we found the stochastics, the MACDs, and the relative strength index. They were all neutral, gave them all yellow marks. On the weekly chart, we found the stochastics were neutral, gave it a yellow mark. MACDs and relative strength index, they were still negative, so we gave them red marks. For a total, we got 2 red marks, 4 yellow marks, and 0 green marks for the 10-year Treasury yield. That means money has been flowing into the Treasuries themselves, and that's what's driving yield prices down. And now we'll look at the Dow Jones Industrial Average. And on the daily chart of the Dow Jones, things are not looking good. Stochastics down below 0.1 shows we're in oversold territory, but we're looking flat, so we gave it a red mark. And 0.2, the MACDs, they're still in decline. The histogram bars have fallen again too, so we gave this one a red mark. And up top, 0.3, we're still trending downward on that relative strength index. Not looking good, so we gave this one a red mark. And a look at the weekly charts, not looking much better. Down below, 0.1, the stochastics, they're in free fall here. Black line crossed over the red, and they've been declining since, gave it a red mark. And 0.2, MACDs did confirm them, and they still continue to decline. And the histogram bars are dropping further too, so we gave this one a red mark. Up top, 0.3, relative strength index, continues lower, gave it a red mark. And so, summing up the Dow Jones Industrial Average, analyzed daily chart and a weekly chart. It's not looking good anywhere. Stochastics and MACDs and relative strength index on both charts were all negative. Got 6 red marks, 0 yellow marks, and 0 green marks for the Dow Jones. And so we've been coming up with scores for the US dollar, the commodities, 10-year Treasury yield, and Dow Jones Industrial Average, looking for where the strengths are and where the weaknesses lie. We did that by analyzing the number of positives and weighing against the number of negatives and coming to a conclusion that way, and understanding the key relationships we discussed earlier. And this week, coming in first place, clearly we had the US dollar with 4 green marks, 2 yellow marks, 0 red marks. We're seeing strength in the US dollar right now as the sell-off in the market is going into cash. And in second place this week, we had the commodities. We had 2 green marks, 4 yellow marks, 0 red marks. And in third place, we had the 10-year Treasury yield, 0 green marks, 4 yellow marks, and 2 red marks. That means money is also flowing into the 10-year Treasury still. Got QE2 ending here June 30th. Money is still flowing in there from the Federal Reserve, and money is going in there selling off out of the Dow Jones too. And speaking of Dow Jones, last place, 6 red marks, second week in a row, 0 yellow mark, 0 green mark. Not looking good for the Dow Jones. And take a look now at our market gauge. The object here is to be as far in the right column in bullish territory as possible, and as far away from the left column in bearish territory as possible. And this week, as we said earlier, US dollar came in first place, and it's climbing higher into bullish territory. And the CRB Index has dropped down, and it's falling, so it's got second place here. It's falling into neutral territory from bullish. And the 10-year Treasury yield came in third place here. I expect to see a decline further in the 10-year Treasury this week as we're finishing up QE2 here, so it makes sense the commodities would fall down this week and the 10-year Treasuries would probably go lower too. 10-year Treasury yields, that is, as the 10-year Treasury prices climb higher. And the Dow Jones Industrial Average, things continue to look bearish right now, as I think we're going to go down to about that 11,000 mark that I mentioned last week. It's not looking good at all for the Dow Jones. IBD 50 holdings. Now last week we went into cash 100%, so we're not actually going to lose money this week. But we only have 4 stocks, so we are still going to lose a stock because the worst performer is still going to be out of this portfolio. And going into this week, got Hansen Natural, the first place winner last week, starting the week out with $1,676.24. And Edwards Lifesciences was second place last week, had $2,074.56 in that stock. Dollar Tree, the third place winner last week, have $2,034.45. Polypore International, for the second week in a row, came in fourth place, and we start out there with $2,522.40. Now let's take a look at our number one performer. And a look at our number one performer this week, coming in first place, it's Dollar Tree. And starting out the week at $61.64, closed the week at $61.75. Difference in the portfolio, a gain of $3.63. Now, since we went into cash, we actually lost $3.63 by not participating in it. But that's okay. Let's take a look at the chart. And a look at the chart of Dollar Tree. It's looking a little bit bearish here. Down below 0.1, the stochastics are giving a sell signal. They were taking a break here, but it looks like we're going to head lower. Give it a red mark. And above that, 0.2, the MACDs, they look like they're just continuing to go lower, and the histogram bars are dropping too. Gave this one a red mark. And up top, Relative Strength Index, it continues to find a lower hole. Gave this one a red mark too. And our number 2 performer this week, coming in second place, it's Hansen Natural. And starting out the week here, $72.78. We closed at $71.59. Got a loss of $27.37. That's actually our savings. Let's take a look at the chart. And the chart of Hansen Natural, down below 0.1, the stochastics, they're reaching lower. We gave this one a red mark. 0.2. Got a confirmation of those stochastics as the black line crossed the red on those MACDs, and histogram bars fell below 0 and continued to decline, so we gave this one a red mark. Up top, Relative Strength Index is falling too, gave that one a red mark. And that only leaves room for one more stock in the portfolio. One of the stocks is going to remain, and the other is going to get sold. And this week, the first stock up, it's Polypore International again. It's found itself here past 2 weeks in a row, and for the third week in a row now, here we are again, battling it out against Edwards Lifesciences. First time it's seen this position for Edwards Lifesciences. This week, coming in, number 3. And remaining in the portfolio, it's Edwards Lifesciences. And opening the week at $86.44 and closing the week at $84.20, we would have had a loss of $53.76 had we not gone into cash. Let's take a look at the chart. And on the chart of Edwards Lifesciences, down below 0.1 the stochastics, they're in bearish territory here, oversold territory, but they're still declining, gave it a red mark. And above that, 0.2 the MACDs, they continue to decline too, and the histogram bars are dropping, gave this one a red mark. And up top, Relative Strength Index, 0.3, it's continuing to drop lower, gave this one a red mark too. And Polypore International is out of here. And opening the week at $63.06, it closed the week at $59.81. An even $130 loss had we not been in cash, but Polypore is out of here. Let's take a look at the chart. And to look at the chart of Polypore International, down below, 0.1 shows the stochastics are oversold, but they're not really looking for any kind of direction. They're going sideways, so we gave it a yellow mark. And above that, 0.2, the MACDs, they got a direction, it's lower. And the MACD histogram bars are dropping lower too, gave this one a red mark. And up top, 0.3, the Relative Strength Index, looks like something I'd like to bite down, gave it a red mark. And so looking at our final results this week, in first place we had Dollar Tree with a $3.63 gain. Hansen Natural, $27.37 loss there. And Edwards Lifesciences, $53.76 loss. And Polypore International, it's still out of here, $130 loss in that one. Now, we didn't actually lose any money here because we did go into cash, but Polypore is out of here. We saved a total of $207.50 in the portfolio this week by being in cash, so it was obviously a good move. Let's take a look at this week's positions. And every week we get a new stock in the portfolio, and last week we took the position of cash, and this week we're going to do much of the same. We're going to go into cash again because things just don't look good. Dow Jones looks like it's going to head lower. Looks like the dollar is gaining some strength here, and all the stocks we got in the portfolio here are giving off some sell signals. So we're just going to hold on right now with what we got. And so going into this week, our holdings, we got Dollar Tree in first place this week. Got a total value there of $2,037.75. Actual value of $2,039.83 because we sold last week. Hansen Natural, we're going to start with a value this week of $1,646.57. Have an actual value though of $1,742.23. Edwards Lifesciences, got $2,020.80 total value there, but actual value is $2,121.11. Got cash from Tempur Pedic sale last week, $2,781.62, and got cash again at Polypore this week, $2,572.33. Total value of the portfolio, actual value is $11,257.12. Ain't nothing wrong with that, as we started out with $10,000 only on January 28th, and we got a 12.5% gain here, and we're locked in with cash right now, so we're going to stay put. Looks like we're going to head lower this week. Caution is advised for you guys out there, and you know, these stocks have still got to perform, or else they're out of here.